that everything working as we want it to be. I'm just getting used to this new interface that we've got for the webinar. Okay. And it's a great time to say that the webinar is recorded. Right now I'm testing that to see that everything is okay. And meanwhile, I will explain to you how the webinar is going to happen, what we're going to have in every step. Just a second. Hopefully now it will work. Please, guys, use the question section to know that the sound is okay. Then I can carry on with these. I just wanted to explain what will happen in the webinar. So like I said, I'm Danny. This is the online trading webinar, the beginner's version, even though we're going to learn some very interesting things, even for intermediate and advanced traders as well. Okay, now it seems fine. Yeah, to begin with, we're going to have a nice introduction to AvaTrade, what services we have in our facility that can assist you along your journey. And then the second part will be more practical regarding some decisions, some logic behind decisions we have here. Buy, sell, what does it mean, what makes sense to do and how to do and so on. And lastly, we'll have analysis as a bonus. You guys know the drill. That's only if we make what we need to do on the first and the second part, and we'll have extra time for that. Okay, so as I said, the webinar is recorded. I'm just making sure that everything is as it should be. So just a few moments and then we can begin. And one more thing, any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or a suggestion. So guys, I'm going to disappear for just a few moments, then I'll be back and we will begin. Thank you very much. Okay. All right, so we are back. Everything seems okay. Beside, guys, I want you guys to please reply in the question section that the sound is okay. Because on my end, this is a new interface that I've been working with for some time now, and I have no indication how it sounds on your end. Okay, that's great. Thank you, Miranda. Kim, very good. Okay, Tobias, very good. Okay, so we can carry on with ease. Like I said, I'm Danny. This is the beginner's online trading webinar, and we can finally hit the road. Just gonna get ourselves some nice, there we go, some nice place to write down the notes. Okay, and to begin with, like I said, we're gonna have a nice introduction to the company and the services. As many of you know, AvaTrade exists since 2006. We have 9 licenses worldwide. Okay, our customer service is reachable right here at the bottom left. Okay, this whole interface is called a web trader. So you should be able to get you can either use the chat or the WhatsApp, but if it doesn't look this way, if it looks a bit different when you're logging in with your email and password, okay, just log into avatrade.com. If it doesn't look this way, you can just send an email to cs@avatrade.com and they will apply it on your behalf. This is not something you need to download or install or anything. It's supposed to appear as soon as you're logging into the website. And as I wrote here beside, we have it in the app. Okay, so this may be the desktop version, but the app looks very similar. Maybe it's presented a bit differently, but the features and the whole interface acts the same. Okay, and beside customer service, if you guys has any queries or questions, you also have somebody called a senior account manager, depending on your eligibility. Account manager. Okay, and he can assist you with the trading side. So we have customer service for customer service and an senior account manager for everything related to trading, beginning from calculations, analysis, strategy, a plan, education, anything you can basically think of from the trading aspects. Okay, and yeah, if you want to get an assignment for a senior account manager, usually the way that this goes is you make a deposit, you verify the account, and a senior account manager is contacting you depending on your eligibility. You can go ahead and ask customer service to ask for an assignment, okay, for somebody to be assigned on your file if it hasn't happened automatically. Yeah, beside that platform, I'm just going to put it here underneath. We're going to have a nice list of platforms that we provide. Beside that, we also have the MetaTrader 4 and the MetaTrader 5. Okay, and we have Ava options and then Ava social. Now I'm just gonna explain a little bit about Ava Social, as this is a beginner's webinar, and Ava Social is a very unique tool that can be very fruitful for beginners and intermediate and advanced clients as well, but especially for beginners. And in a minute, I'll explain to you why. And Ava options, there is no much to say. As I always say, for somebody who is trading options, Ava options pretty much offers everything you need. Okay, every single thing from the options facilities, Ava options can have a solution for that, and I highly recommend you to try. That's all I'm going to say about Ava Social at this point. About Ava options. And about Ava Social, the way that it works is very similar to how it sounds. Ava Social as a social media. And what it lets you do is it lets you follow and copy other traders. The way that it works is very, very simple. If I'm following somebody, what will happen is I'm going to get notifications. I'm going to get messages with his positions, with my trader's positions, and I can just choose if to perform it or not. Okay, similarly, if I'm copying somebody, the process happens automatically and my execution will happen automatically without me to either want it or not. I can always decide to stop the process if I don't want to follow somebody or copy somebody anymore. I can always stop it, it's not a problem. And the huge advantage that it gives for somebody without any strategy or with a strategy that still needs renovations is that you can just follow somebody without wasting any of your time, just observing from the side and choosing what's good for you. Okay, it could be very, very fruitful. And the copy, well, it's a huge time saver. If you find somebody who is good to copy, obviously the results will be the same as long as your balances are computable. Okay, and yeah, Ava Social is free to download, so I highly recommend you to try. Now, beside those platforms, let me just somehow, there we go. Okay, we're gonna cover a few things here at the left hand side. As I've explained in the beginning, this is the web trader. It's not necessary to download or install anything. And what we're gonna do is simply we're gonna cover a few features here that can only be found, unfortunately, on the web trader. That means, in other words, that you won't be able to find it on MT4 or MT5. Okay, to begin with, as always, we're going to begin with the signal sections. Okay, the way that this works is via two ways. I can get signals in two ways. I can minimize the chart here by clicking on the top right two tiny arrows. As you can see, I don't know if you can actually capture that. That's two arrows pointing on themselves. And if I click it, they're pointing outside, right? And by doing that, I'm just folding down the chart, and then I have this nice toggle that I can click up and down. And then the signals can be reached through here or by the signal section itself. It does have an advantage choosing from the signal section, because in here you can't actually see the signal production time unless you click it. Okay, when it was produced, you see the signal production time. This is when it was, and I cannot see that from here. But if I go to the signal section itself, it's in linear date by the time that was produced. Now you probably imagine that there is some importance to when the signal was produced. If it was just produced an hour ago, a minute ago, an hour ago, maybe several hours ago, because the market is always moving and the price are always changing. And well, the natural way is things that were analyzed recently might have better potential. Okay, I'm not getting into numbers and it's how big the difference is if a signal was produced now or 3 hours ago, but you probably can understand the logic. Okay, yeah, so this is one of the advantages using the signal section itself. Furthermore, everything that I'll probably find here is, well, has a signal. Otherwise, it wouldn't have been here unless it's something that already passed. Okay, I'm just going to simplify just the idea of how signals are made and how we're going to use them. Okay, just so we can maybe just take another step. Okay, let's take something from here. How's the FTSE looking? Yeah, well, that's just surprising. This is usually a message we're going to find on something that has, you see, it's blank. The stop loss and the take profit, they're not here anymore. Okay, let's see what happens if I click it. No, it's not valid anymore. And this is exactly, yeah, it's still here, but let me go back to the signal section. No, it's still here, but it's showing us, okay, maybe it will update and the stop loss and the take profit are not going to appear. Okay, usually with a signal that is up to, well, I can say up to date, the way that this is going to look like is a little different. Okay, let's go with the Euro stocks. Okay, oh, that has already passed as well. Let's take pound versus Japanese yen. Okay, when I don't have the message, naturally, this is how it's supposed to look like. Then when I click buy or sell, it's going to place the take profit and the stop loss by itself. Okay, now the signal is actually, the signal are instructions what to buy and what to sell, or maybe how to buy and how to sell. The way that it works is there is a certain value. Okay, this value, this the entry price, this is the price that we're seeing. Okay, that upon that the signal was produced, and this signal is based on certain levels, support and resistance. As you can see here, I'm just going to quickly change the validity. Validity here is 1 day. This is how it was presented, so I'm going to change it to 1 day. And to those levels down here and up here, this is called a support. You see what it's written here, support. This is my pivot point. It's pretty much before the support. Okay, it's the first line of support, perhaps. This could be interpreted a bit differently, but never mind. It's not the point now. The point is that according to this, where is our value? Okay, according to that value, the signal was produced, and it's telling us that by itself, if I choose a scenario, let's say if it's a buy, okay, according to those levels, it's going to place automatically a take profit and a stop loss. And if it's a sell scenario, it will do the same for a sell scenario. Okay, let's just place it roughly. We're not going to really be picky about what's after the decimal, or maybe we should. Okay, never mind. Just going to place it to see it visibly. And that's 192. Okay, so 191,680. It's absolutely not mandatory to do what I'm doing now, guys. I'm just checking. Okay, I'm just checking to see that it makes sense in my eyes. Let's paint it green. Right, so let's recap. The signal was based upon support and resistance. There are certain pivot point here, and according to that, I can pick a buy scenario and a sell scenario. In a buy scenario, I want the value to increase. In a sell scenario, I want the value to decrease. If, God forbid, I took a buy and it go against me, I will have a loss. And if I took a sell and it goes up, I have a loss. Very, very simple and very, very basic, but it can save me a lot of time. The reason is it places the take profit and stop loss automatically. Let's understand just a bit what exactly take profit and stop loss are, so I can keep showing you the signal and it would make sense. Take profit, stop the position with a profit, stop or close, okay, and stop loss, stop, close the position with a loss. Okay, automatically. Let's put it this way. Okay. Now, of course, there is a certain logic of how it works, and I can make comparison to see that the ratio is to my liking. But in general, to execute the signal is very fast and very easy. So let's go back to the beginning, and just to show you how simple that is. Okay, I can also find it in here. But let's go back to the signal section. Okay, so this is one time we're clicking. This is another time. And now I can choose buy or sell. As I said, I can make the comparison if I want, change the validity, place the line here, no problem. But if I go with the signal as it is, I can just go with buy scenario or with a sell scenario. Let's go with a buy. Okay, and it's already showing me, let's take this to the bare minimum. It's already showing me that if it gets to the take profit, I can make 4. If it goes down to the stop loss, I can lose 2. The more I'll increase the lot size, the bigger my profit or loss will be. Okay, very, very simple. And yeah, of course, there are better ways to utilize with a signal. When you have the proper skills of how to trade, it could be more useful. But that's for now. I just don't want to waste a lot of time on the signal section. But I guess you guys understood the idea, right? There is a certain price. Trading Central is providing us with the signals. As it's written here, every signal has its own validity. Every signal has its own support and resistance. And every signal has a buy and a sell scenario that you can pick and make a comparison to if you like it or not. Okay, this is the sell scenario. Maybe I find it less attractive. Okay. Right. Yeah, before we carry on with these, are there any questions? Let me just, in the meantime, I'm going to write down just something to have at the back of our mind. Yeah, let's begin with that. Right, we have technical and we have fundamental analysis. The way that it works is very, very simple. Technical is everything that is in the chart. Fundamental is everything that is not, well, that is outside the chart. Okay, technical analysis will be exactly what we saw in the signal, support and resistance, averages, and statistics, and all kind of technical things, which we're not going to discuss too comprehensively at this point. And fundamental analysis is more into news, occurrences, decisions that has economical impact, employment rate, all kind of decisions, basically all kind of events, which I'm going to show you also a way in our facility to get some fundamental analysis. So for this technical analysis, you have the signals as I showed, and you can learn how to do it by yourself. And for the fundamental analysis, we have here the news section, which is right underneath. Okay, and it's also divided to different categories, which I can pick from. And on the right hand side, we have the topic here. We also has we have time that it was here, it was posted, and here two related instruments. So this is what it's relevant to. Some news has more. Oh, there we go. You see, this one is an example. It has 4 possible impacts: crude oil, gold, Bitcoin, and Aussie versus the American dollar. And yeah, this is very, very useful. Beside that, we have the economic calendar. I'm going to go to discovery. You see right underneath. So we have the signals, news, and right underneath we have discovery with analysis views, market buzz, Forex features idea, economic calendar, and the trading calculator. And clicking here on economic calendar, there's a question here: how do I transfer money from one account to another? Basically, if you go to, I'm not going to show it to you now with my account because this is a demo account, but you can ask your senior account manager to assist you with finding the button here. If you click on this and then go to my accounts, you should be able to see a button, transfer funds. When you click on the transfer funds, it lets you choose from which account to which account and the amount. Okay, Mr. Johnny Ide. Okay, I hope that it helps. Yeah, and the economic calendar, as I've explained, is right here at the bottom of the list, almost all the way to the bottom, but it's through this globy icon here. You see economic calendar, and something here doesn't make sense. Am I marked on something? Oh, I marked on UK. Never mind. Let's demark that so we can see everything. There we go. And now, as you can see, I see all the countries, all the decisions, all the events from all kinds. And I can choose by different parameters how I want to see that. So there are several things. A, I have how big the impact is. If it's a major event, it will be defined as high. If it's less than that, it's medium. And then low will be the lowest impact we anticipate. The second way to filter is actually through the flags. If I'm more interested with the US dollar and I'm more interested with what's happening with the yen, and yeah, that is for now. So it's only going to show me events that are related to yen and to the US dollar. And I don't have to search only for today. I can go from today, let's say 2 weeks, pretty much forward. It's going to show me, you see the date here? It says the date here. And oh, something here. Oh, it didn't. I'm sorry. You have to click it. And then to click it again to see this light blue trail from the date that you choose to the date that you took it. And then when it's showing you this light blue trail, it's going to include. This is why it didn't make sense, because it was on the 3rd of April. Okay, we're still on March. But now it's fine. As you can see, this is 20th. Gonna go down. This is tomorrow. This is probably Sunday. Oh, can't see that. Never mind. But you understand the idea. So one way to filter is by the impact. It's called importance C here, but never mind. You see importance low, medium, and high. I can also filter it, but by what's more relevant for me. And I can also choose the dates. Okay, and if I want to see only important events, I'm gonna click here on high, and you see it's only showing me the high impact events. Yeah, and if I'll choose something like that as an example, okay, as you can see, we expect the interest rate. We have a decision today to stay the same. Okay, like happened, I think last time it stayed the same. And if I want, I can actually add it to my calendar. I can click in here, and then I add it to my calendar, and then I know, okay, at this time I can expect some fluctuations. and in here it can show you the impact, what we think that can be the impact, volatility, the price chart here, and the event chart. Okay, all kind of useful things. This can be happened through here or there, and those are basically what are the same icon, just elaborated to a button, but basically it's the same. You see, it's the same. Yeah, yeah. I don't think there's so much to discuss about the economic calendar. Well, not at this stage, at least. Do we guys have any questions? I also forgot to ask about the signal section, right? Guys, do we have any questions till this point? Any questions? Or about the signal or about the calendar? Oh, let me reset that as well. Oh, and I can search, by the way. I nearly forgot. Let's get rid of that. I nearly forgot to show you guys. You can also search if there is a particular event you want to just look for. You can just put it down here, and it's going to show you you can look for a particular event. Okay. Yeah, that's pretty much it about the economic calendar. Let's just proceed if there are no further questions. And yeah, that's pretty much it, I think, for the intro as well. We concluded it. Yeah, it's pretty much it. We can carry on. I think it's time for the second segment. Okay, and let's just find ourselves a nice asset to analyze. Perhaps one of the, let's see how gold is doing. Even though it plunged quite considerably after the NFP. Yeah, but it doesn't look too bad. Doesn't look too bad. Might even be interesting. Yeah. Okay. This one a little higher. This one a little higher as well. There we go. Okay, so what we're gonna do, so we will know where we're heading to. We're gonna do some preparation so we can carry on with ease. We're looking at gold. I'm just gonna write down a couple of things just to make it a little more organized. So we have target, time, movements. Yeah, movements and units. Brackets, we're gonna put here lot size, and in here we're gonna put price difference. Yeah, this will be our goal. This will be our time. Perfect. Actually, before we carry on with the numbers, I just want us to get a nice recognition about the toolbar. It's going on up here, so we will know how to utilize the interface to its full extent. This is actually, not many people know in the first sight, but this is actually a search bar, which I could just put here gold and pick it from the list. I didn't have to do it manually. Yeah, in here, as you saw in the signal section, when I changed the validity, so in here I can also change the validity. I'm scrolling down to expose more time frames. I gotta tell you, okay, there is a thin toggle here, but it's not easy to see. So you can scroll down with a wheel on your mouse, and in here I can change candlesticks, bar if I want. Okay, if I keep going to the right, I have here the crosshair that without it I won't be able to see the data from the candles. Okay, and then keep going to the right, I can split the chart. If I want to make it 2 as an example, or I want it up and down, yeah, can play with that. Here we're gonna add an indicator in a moment, so no problem, I'm gonna show it to you anyway. And in here you saw where I've placed the lines, so it was from here. You get to whatever you're gonna pick from here, it's gonna stay here. so you don't have to open it again. So as an example, if I'm choosing the oval, you see it will become an oval. And then I can take another one, similar with the lines. Once I choose, I stick it to the chart and it stays as it is. Very useful and helpful to remember certain levels. Okay, let's just bring it down to where it was 77, I guess, and it was 47. Yeah. Now we're going to write down a few things. As I said, we're going to go by TTMUs, that goes for target time movements and units, and that will help us potentially construct the position in a way that makes sense. First thing that I'm going to do to even see the sidebar is to click sell or buy. Then I have the sidebar to the right, and I'm going to take the lot size down to the bare minimum, 0.01. And now what I'm going to do is I'm going to think of a number that I would like to make out of the position. Otherwise, even if I click here buy and I got lucky and gold went up, I still would never have any indication of where to close the position and if it will be good or not. Okay? When I have a target, at least I know, okay, I'm planning to make X amount of money. If it reached the level where I'm making this much, I can just close the position. Okay? As an example. On a nutshell, that's also a nice way to form a little bit of a strategy. Right. So the target in this case is it needs to be as realistic as it can get. Of course, if I'm aiming to make $1 million with 10,000 on this position, it might be challenging. Okay, let's go with the target that as realistic as we can. Let's say $1,000. Okay, as an example, which is only 10%. And the time length for this will be actually 2 weeks. Okay, we don't want to be too ambitious and to find out it was far-fetched. But let's see. $1,000 in 2 weeks. How does that sound? Not bad, not bad. All right, now to figure the movement, I can do one of two things. A, I can simply put I can take, oh, we're looking at days. I'm sorry, guys, just a second. Okay, so since my target validity is two weeks, okay, why is it important to measure the length? Why is it important to know what my trading style and if I'm holding it for a week or for a day or for an hour? Okay, why is that important? Several flavors. The first flavor is to know that it's, well, worth my time. If I'm planning to make $1,000, but this will take me 2 years, well, I took it a little too far. 1 year, maybe it's not worth my time, right? Gonna make less on average. I'm gonna make less than $100 a month. If I'm making it in, let's say even a month, still maybe it doesn't match completely to what I want to achieve because I have my expenses and God knows what. So I've minimized it to 2 weeks. I could go for 1 hour, by the way. This could have been lovely to make $1,000 per hour, but it might require a lot of margin and it might put me vulnerable, which I choose not to at this stage. Okay, so I need to find something in between. Not too long, not too short, something that would make sense and I can execute with ease. Okay, or at least with a certain level of comfortability. Okay, so let's make it 2 weeks for the time being, and we're gonna go with movements just to understand how we can pull it off. Okay, so now we're gonna change it to weeks, and we actually have different levels here. Push it up a bit. Yeah. Okay, it doesn't seem to move. Let's see if I can drag it a little to show it to you guys, because I do want to see the higher point, which presently doesn't let me do it, and that's completely fine. Okay, we're gonna settle with what we have, and that's okay. The movements, the way that we can get the movements from this chart is via two ways. Well, many more than two ways, but I'm going to show you just two ways. Okay, when I'm pointing on the candle, here on the left upper corner, I have this squarey bubbly thing that's showing me the date, the open, high, low, and close. All those specifications can help me indicate what has happened and maybe what will happen in the future. Okay, we're going to put here O for open, C for close, high for high, and L for low. Okay, and simply we're going to put the numbers. Oh, what did I do? I'm going to put the numbers from the squarey bubble. Okay, 2181. Close 2156. Make sure you're doing it. You're looking at the right number because it's not in the same order as written on the platform. You see that I wrote it this way: open, close, high, and lows. But in here it's wrote open, high, low, and close, right? You're seeing that it's a bit different: open, high, low, and close. So make sure you're looking at the right thing. And then what I'm going to do is simply I'm going to subtract the open from the close and the high from the lows. But in this particular example, it's not really useful. And the main reason is that this is just a single candle. And every week can be entirely different than its friend. Let me just show you a minor example. You can obviously see, even without me telling you the numbers, you can obviously see the size and the difference of every candle just by comparing here and see its visibility, right? You can see that each rectangle is around a candle with completely different size. This one is bigger than that one is bigger than that, and this one is bigger than the small bullish candle. In other words, what I'm actually telling you guys is one candle might not be enough. It might not be the average that we're looking for, because this one is quite exceptional. So what can we do? What we can do is simply click here on FX indicators, where it says type to filter is to put AVE for average, and then to pick average true range. Okay, now it's showing me the inputs: length, average type, and 1px for the ATR. There is really no need to go for 12 weeks backward. This is the amount of candles that it grasps, right? So I don't want to go too far because this might be a little too far for us. I might as well just go maybe just a month, maybe a little more than a month. Let's just go 6 weeks, okay? And we're going to change it to yellow, so we want to be confused. Okay, and now what happens is the ATR actually accumulated the same thing we did. You see, the same process the ATR did by itself automatically, and it's giving us the figure 49.828. I wouldn't be surprised if this guy had something to do with the average. Okay, and yeah, now this is the average true range. This is the average. It's not a defined figure that I know absolutely gold is going to travel through 49.828. No, that's just a range. That's just to tell me, Danny, if you're aiming for a sell to be at, let's say, here, right? What do you guys think? Is this a good destined price, right? If I'm aiming gold to be at 2000, let's say that I don't think that there will be any improvement with gold, right? Let's suppose that the interest rate will stay the same. The economy, we can assume that it will be, we can think that it might be stabilized, and as a result, I might think gold will flinch down and get to 2000. Now tell me, did this scenario make any sense to you? In other words, can gold get to 2000 in 2 weeks? From where it's at right now, that's, yeah, and additional brackets, $154 away. Guys, do you think that this scenario is realistic or not? And this is important for me that you guys will respond to this question, because this way I know where you're standing with experience and I would know how to explain further on. Do you guys think that this is in the range of the ATR? Let me just clarify here. ATR range per week, 49. Yeah, this is the range. Now my question is it in the range or out of the range? This 154. This is the range, right? This is the range. Okay? Even if it would go according to the ATR all the way down, right? 49. So we have the first 49, it's approximately here, right? And another 50 will be roughly somewhere here, right? So this is way beyond my range. Way beyond my range. If I'm aiming for 2000, ATR doesn't agree with me. Okay? So the ATR is here to show us the proportion and the measurement if the movement we're expecting for is far-fetched or not. This is why what I'm going to put here is actually 50. We're going to go with the ATR if it's for 1 week, for 2 weeks, and we can expect, because gold can potentially move 49.828 in a week, I guess that 50 in 2 weeks might not be too much to ask. Okay, which brings me down to the take profit at 21.05, roughly. Maybe 21.49. Okay, we'll see. Right? This is if I believe that this is a sell. Okay? Which I don't. Actually, I know, I'm kidding. It might be a sell, but nobody knows. We'll wait for the interest rate decision. Yeah, if I'm taking a sell, then that means that my take profit will have to be in the lower. You remember that in the beginning I've explained, if I'm taking a buy, the intention is that the value will increase. If I'm taking a sell, that the intention is that the value will decrease. Okay, we're gonna paint it in red. This one is gonna go, sorry, this one is gonna be red, and the take profit is gonna be green. Let's make the take profit 2104.75. This one, I'm gonna change it. Yeah, and okay, now we're gonna put here summary. Oh, actually, we wrote it this way, so we're gonna keep it as it is. Target, or in brackets, summary divided by movements equals units. In other words, 1000 divided by 50 equals, who knows? 20. Very good. Okay, now let's test it out. This is our units, and this is supposedly our lot size. We're going to put 20 and put it to the test. Okay, where it says amount lot, I'm simply going to put here 20 and see if it makes sense or not, which make sense. Very, very good. Actually, let's make it flat. I see that it moved a little, which is good for us. Okay, and then I can make potentially my 1000. Very good. Now we can add another layer. So we have this sorted. We have this composition making pure sense. We saw the ATR. We have lined up the take profit and potentially the stop loss here. We're going to see if it's good or not. Guys, until this stage, till this point that we are at right now, do we have anything that doesn't make sense? Do we have any questions at this point? Okay, Mr. Maha and Mr. Vincent, please ask what you need. Oh, I don't know if I folded it down. I'm really not used to this interface, but please, guys, I saw your names. You can feel free to use the question section and ask what you want. Is there a? Oh, okay. Never mind. Oh, all right, guys. So I'm just gonna proceed, okay? And as I've explained, we have this part sorted, okay? And then we have the equation here that will assist us finding the units. This also could be the other way around, right? If I already know what my lot size is, and I want to know the necessary movements, this will work the other way around just fine. Right. Now, we have here the take profit and the stop loss. Take profit and stop loss. Let's simultaneously put the same length for the stop loss as well. So we'll be looking at 1,000 in loss. So that means that from where it's at right now, we're going to add another 50, which brings us to that. And just a second, let's see if we can this time, we can, okay, it doesn't seem to let us move it. And that's, oh, there we go. There we go. Okay. Now, if I'm looking at that, oh, what it doesn't look right. There we go. Let's just make it 0.20. No, it still isn't enough, but never mind. Okay, it's almost 1,000, so we're gonna look in here saying the take profit is 21.04 and the stop loss 22.04. Okay, and as a result, we can actually be in $1,000 profit or minus $1,000 loss. Now comparing it to our balance 10,000. So if I'm multiplying that by 0.01 percent, that will be 10%. You don't have to go too far. You can compare 1,000 to 10,000 and see that this is 10% exposure. Okay, and 10% exposure is not something that I might accept. Okay, there is something called risk money management, which everybody can make. Oh, yeah, management. Sorry, which everybody can make their own risk money management, and you can decide, okay, I want to expose my account to this level or to that level, and then you know, okay, if this position will put me 10% in exposure, that means that if I have 3 positions like this, I'm already 30% exposed, right? And if God forbid my positions hit the stop loss, I wipe out 30% of my account. Now, I'm not going to discuss now. We don't have the time to discuss the recommended percentage, but I'm just going to tell you to think about the exposure this way, the risk money management this way. You have your account exposure and you have your position exposure. And your account exposure is calculated with position exposure multiply amount of positions. In other words, actually, let's replace. I think it will be a little easier to explain it this way. And the exposure, okay, so that makes it, we said, let's say 10%. Okay, actually, this is not correct because this can be different. We have, let's say, position A. It needs to be summed. It needs to be summed. It doesn't need to be multiplied, guys. I'm gonna correct it in a moment. Okay, just a second. Yeah, just hold on. Okay, so the position exposure summed to total exposure, or as we said, account exposure. Okay, that means, in other words, 10 plus 5 is 15, and this is 10, that makes it 25. Okay, so each position here is representing a certain number, and this is my whole account exposure. Of course, if I'm just trading one position at the time, I don't need to do that, and my whole account is actually my position exposure. Okay, but if I diverse and if I take more than a single position, my exposure will be compounded up to the level as I have explained and wrote down here. Okay, now how do I, so let's suppose that 10% is a little too much and I want to go with 5, right? I can do one of two things. A, I can lower the lot size from 20 to 10, but we've already realized that by doing that, I'm not going to make the 1,000 that I'm looking for. Instead, I'm going to make 500, right? Because the necessary amount is 20. Okay. The other thing that I can do is I can just get the stop loss closer, and by reducing the length between my stop loss to my entry, I'm actually minimizing my loss. That means that instead of this, I can go with that and then with this as an example. And if instead of 50, I'm going to go with 25, I'm simply going to reduce my, just a second, something here didn't make sense. That needs to be this way, right? And, oh, that needs to be 20, yeah. Okay, and I can, of course, I can increase it a little bit. If I want it to be 25, it needs to be from where it's at right now, it needs to be 80, right? 25 plus 21, 54. It needs to be 20, and then I'm with 5% instead of 10%, okay? This way I can minimize the potential loss. I'm not getting into if it's a good idea to place my stop loss here or not, analysis wise, because preferably I wouldn't want it to be too close. Now regarding the budget, okay, so let's just recap. Here we composed a position that makes sense. We use the ATR as an impression for the movements to know if it's realistic or not. In here, we use the equation to determine what's the lot size and the necessary units to acquire to accomplish $1,000. In here, we saw the take profit was placed this way, so we could make comparison and put the take profit was placed this way, so the stop loss was impressionated to do the same. This way we got to 1,000. Don't forget, it was like this initially, 21, 2204. This is how it was. We adjusted it. We adjusted it for the sake of risk money management. Okay, because the 10% was too much. And we also spoke about exposure, overall exposure, position exposure. Okay, and the last thing that I'm going to show you before we say goodbye is just a quick comparison of how much budget is necessary to open this position. So we have something called price per unit. We have the units. We have the leverage. And we have the margin impact. So price per unit times unit equals value. In this case, 2,154 times 20 equals 43,000. 43,000. Don't worry, guys, I didn't do it so fast in my head. It's already written here, and that's the advantage of using the web trader. So 2154 times 20, there you go. See, very easy. It's already here. The leverage is here as a multiplier, buying and selling. Okay, it's already written here. You don't have to remember anything. And lastly, we have the margin impact, which is the necessary amount to open a position, right? And that's basically by dividing, let me just write it down, value divided by leverage equals margin impact, which in this case, let's do it together once. Right? Value divided by leverage equals margin impact. Once again, value divided by leverage equals margin impact. How does that make any sense? Well, because I multiplied thanks to the leverage and I multiplied by 20, I can just divide that number by 20 and then I know how much I need, isn't it? Which stands for 5% out of the value. If I click here on instrument details and I scroll down and I can see that the 5% in here is considered as the necessary margin. Okay, it's as I have explained, you don't need to remember any of the things I said from a simple reason. It's already here. It's already written right here for you, okay? So once again, value divided by leverage equals margin impact. And with this, guys, we're going to conclude our today's webinar. Oh, it went back to where it's been. Now that makes much more sense. Well, that's how surprised. This is the the exact number of the price because the leverage is 1 to 20. But it can be different. It can be different, guys. Don't be confused by this 20. It could be different to each and every asset. Guys, it's been a pleasure. Unfortunately, our time is up for today. You're all more than welcome to join us tomorrow with a live Q&A. I wish you all a good week, fruitful week with profits and success. And that's it. It's been a pleasure. Thank you for joining me today. And that's it. Have a good day.